Hello students, this is Dr. T.G. Umar from Maharani's College. I am with session 10 in unit 1 in advanced corporate accounting, and I will be discussing yet another problem on redemption of preference shares and covering bonus issue of shares as well. So let's go with the problem here. Following is a summarized balance sheet of Jumbo Limited as on 31st March 2015. So if you go to the share capital, it is having equity shares and redeemable preference shares of two kinds. One is fully paid up, the other one is partly paid up. So 2,40,000 is where only 80 rupees is paid up. So 4 lakh debentures, redeemable preference shares, you have fully paid up, 100 rupees is paid. So 4 lakhs is a capital amount. So going through the shares and reserves and surplus. So capital reserve is 1 lakh, general reserve is 1 lakh, share premium is 60,000 and profit and loss account is 2 lakhs. So creditors, you are having 1 lakh. So fixed assets are there, investments are there, current assets are there. So this is about the balance sheet summary. So going with the adjustments on 1st April 2015, the company redeemed the preference shares at a premium of 10%. In order to pay off the preference shareholders, the company sold investments realizing 2,10,000. So one thing you need to observe here that the book value of the investment is 2 lakhs and it is getting sold at 2,10,000. So 10,000 is a profit that the company makes in the selling of investments. So whenever an investment is sold, you can incur profit or it might incur loss. So both is transferred to the P&L account. So here going on further, on the same date, the company issued fully paid up bonus shares in the share of 1 for every 2 shares held. So the bonus issue is also made here. Now for this, we'll have to show the journal entries and also prepare the balance sheet of the company, right? So now let us go with the journal entries. So first thing is the company is selling the investments, right? So 2 lakhs is the book value of the investment. So it is getting sold at 2,10,000. So bank account data to investments. So 2 lakhs and 10,000 is the profit that they make and that is transferred to the P&L account. So next is the company is now issuing 7% preference shares of rupees 10 each, which were fully subscribed in cash. So you are receiving the money, is it not? So bank account data to 7% preference share capital. So 2 lakhs is the amount that gets added up to the bank balance of the organization. So this is how the organization is able to raise money through the issue of preference shares. So going on further, so the 4 lakhs preference shares are redeemed here. So one thing that you make sure when you are treating the redemption of preference shares is whether it is fully paid up or not. So here, if you observe, it is fully paid up. So we can straight away go ahead with passing the journal entry for the amount that is due to the preference shareholders. Now, 4 lakhs is due towards the share capital and 40,000 is a redeem premium on the redemption of preference shares. If you add up these two values, it works out to 4,40,000. Correct? So here, the organization is making good the redemption. So totally we are allowed to pay 4,40,000. So 2 lakhs is gotten from the investments, right? So the other 2 lakhs that the organization is making through the issue of the preference shares. So we will have to pass an entry for the capital redemption reserve. So here, general reserve account data to profit and loss account data to the capital redemption reserve. So 2 lakhs is the total amount that is getting credited to the capital redemption reserve. So the amount that is standing to the general reserve and the P&L account are transferred to the capital redemption reserve. Now going on further, the share premium account is there, right? So whenever the premium is paid to the preference shareholders, the amount is made taken up from the share premium account. So to the extent the premium is paid to the redeemable preference shares will be taken up from the share premium account. So the journal entry corresponding to that is share premium account data to premium on redemption of preference share capital. Finally, so we make the payments to the redeemable preference shareholders along with the share capital and the share premium. The total amount is 4,40,000. So that amount is transferred. Now the capital redemption account is debited with 2 lakhs amount. Share premium is debited with 20,000 and P&L account is, debited with 30,000. So the order of preference is such that first is you will take up the capital redemption reserve, then the share premium. Finally, we touch upon the P&L account. So here the bonus shares that are issued is for every 2 shares held, 1 share will be issued. So 5,000 is the total equity shares that we have. Is it not? So 100 rupees is a face value. So that is how we make good the value that is due towards the bonus equity shares. So bonus to shareholders account data to equity share capital. Now here there is no exchange of cash at all. To the existing shareholders only we are paying the bonus. So there is no exchange of cash, that you should remember. Finally, let us go with the balance sheet here. So share capital is 11,90,000. So 5 lakhs is the equity shares which was already existing. So 2,40,000 is towards the redeemable preference shares which are partly paid up, and bonus equity shares are 2,50,000. So if you add up those values, it works out to 11,90,000. So here you have a calculations for the same. Now coming down to the reserves here. So here 2,10,000 is what you had, right? So P&L account plus the profit that is there in the investments by the sale of investment, 2,10,000 less the amount transferred to capital redemption reserve 1 lakh, and the amount that is utilized to pay towards the bonus share, so 1,10,000. So 2,10,000 is what is here. So finally we are left with 80,000 towards the reserves and surplus. So totally we are left with the amount that is 1,80,000. So trade sundry creditors are here 1 lakhs. Fixed assets are remains the same. So 1 lakhs is a stock. Investments will not come. So debtors we have 2 lakhs. So previously we had bank balance of 3 lakhs. By selling the investments, 2,10,000 is got. Cash on issue of shares is 2 lakhs. So totally the payment that is made towards the preference shareholders is 4,40,000. So if you deduct 4,40,000 out of 7,10,000, 2,70,000 is what is the amount that is left over. The same thing is put here in terms of the balance sheet. So you can refer to the notes for the computation of the items which are there on the liabilities and the assets side. So here, if you observe, there is bonus issue of shares and redemption of preference share is also happening. So this is how we solve the problems on redemption of preference shares. Thank you.